So on November 12th, something pretty big happened over on the Indian stock market. You see, the IT sector, which had been going through some, let's call it choppy waters, suddenly just lit up. So what caused this huge surge in optimism? Okay, let's get into it and unpack the perfect storm of factors that sent these stocks flying.
All right, let's dive right in with the big news that really got everyone talking. On that day, November 12th, the whole Indian IT sector basically went on a tear. And this wasn't just a one-off, it was the third straight day of wins, pushing the main IT index to heights we hadn't seen in months. And here's the headline number everyone was looking at. The Nifty IT index shot up by as much as 2.16%, hitting its highest point since back in September. But, that number alone doesn't tell the full story. This one-day jump was actually the cherry on top of a three-day rally that saw gains of over 5%. So yeah, this was no small blip. This was a serious rally. And get this, it wasn't just one or two big names dragging the average up. No, the good vibes were everywhere. It was a sea of green, with all 10 stocks in the index trading higher. We saw major players like Tech Mahindra just leading the pack with a 3.6% surge, and you had the heavyweights like TCS, LTI Mindtree, and Faces right there with them.
Okay, so this brings us to the million-dollar question, right? A rally this strong and this widespread doesn't just happen out of nowhere. What was the catalyst? What changed seemingly overnight to pump so much confidence into the market? Well, let's start peeling back the layers. Now, here's where it gets really interesting. The main reasons for this rally, they were actually coming from thousands of miles away, all the way from the United States. Turns out, a few positive developments over there sent some pretty powerful ripple effects straight to the Indian markets.
So let's break down the 4 key things that happened in the US that got investors feeling so good. First, we got some good news on visas. Second, some positive movement on a trade deal. Third, signs of stability in the US government. And finally, some renewed hope for a rate cut. Let's take a look at each one.
The first, and maybe the most direct signal, came straight from the top, U.S. President Donald Trump himself. During an interview, he seemed to soften his tone on a really sensitive topic for Indian IT, visas for skilled workers. And this quote, well, it was a huge signal to the market. So here's why that matters so much. This comment directly tackled one of the biggest question marks for the Indian IT business model. See, the fear of tighter visa rules has been this dark cloud hanging over the whole sector for years. This one statement helped clear away some of that fog.
And for anyone who might not be familiar, the H-1B visa is absolutely vital. It's basically the main way Indian IT companies can send their skilled engineers and developers to the US to work side by side with clients. It is, and this is no exaggeration, the lifeblood of their global business model.
All right, next up, factor number 2. It looks like there's a bit of a thaw in those trade tensions. President Trump also mentioned that tariffs on Indian imports could be lowered very substantially, which hinted that a real trade deal between the two countries might actually be on the table.
And this really puts the potential impact into perspective. Right now, some Indian imports face these massive tariffs, partly as a penalty over Russian oil buys. But reports suggest a new deal could slash those tariffs from a whopping 50% all the way down to a much more reasonable 15 to 16%. That is a huge potential boost.
The third piece of good news is all about stability in the U.S. government itself. The Senate passed the temporary funding bill, which calmed fears of a long, drawn-out government shutdown. So, why does that matter to Indian IT? Well, a shutdown just messes with economic activity, and that's bad for business for everybody, especially the IT firms that have so many U.S. clients. And finally, the fourth factor from the U.S. is all about the economy. Some signs of a slowing American labor market actually raised hopes for an interest rate cut by the Federal Reserve. Basically, when the economy cools down, the central bank often cuts rates to make borrowing cheaper, which encourages businesses to invest and grow. And traders were definitely betting on it, pricing in a 68% chance of a cut.
But hang on, this wasn't just an international story. A key event right back here at home added even more fuel to the fire, turning what was already a good day into a massive rally. So back in India, the mood got a huge boost from the exit polls coming out of the Bihar state election. The early signs were all pointing to a clear victory for the current ruling alliance, the NDA. And for the market, this was just a huge sigh of relief. Why? Because predictability in government is always seen as a green light for economic stability.
And this slide shows you exactly why everyone was watching so closely, just holding their breath. An unexpected loss for the ruling party could have triggered what some analysts call a coalition discount.
Basically, fears of policy chaos, money problems, foreign investors pulling out, the whole shebang. We could have seen a 5 to 7% drop in the market. The hope for a win, though? That meant stability and business as usual.
And look, the polls weren't really ambiguous about it. Multiple major pollsters were all pointing to a pretty clear and strong victory for the NDA. This data gave the market the confidence that the outcome it wanted, the stable one, was the most likely one to happen.
Okay, so we've got 4 positive signals from the US and 1 big dose of confidence from right here at home. Let's pull all these threads together and look at the big picture.
I mean, it really was a perfect storm of positivity. It wasn't just one thing. It was this powerful mix of global political news, U.S. economic hopes, and some reassuring stability at home, all coming together at the exact same time to just supercharge investor confidence.
You know, this whole rally is just such a powerful reminder of how connected everything is these days. For a sector like Indian IT, whose success is so tightly linked to its biggest market, the United States, a headline from Washington, D.C. can sometimes matter just as much, if not more, than a headline from Bangalore.
Which kind of leaves us with a final thought to chew on. Of course, fundamentals and how a company is actually performing are always important. But this event really shows how fast the market mood can change because of things happening completely outside a company's control. It really makes you wonder, in today's world, what's a bigger driver for the market? A company's hard numbers? Or the words of a politician halfway around the globe? Something to think about.